have been working on a plan of how to leave swing trading without losing too much, and the idea was to not leave a lot of money on the table because we've been talking a lot and even during the day and everything. And we noticed like last week we had 3 different trades which we could have left as swing trading. And Zoe's going to present our idea, like it's a move that will be in total around 200 pips. So we were thinking, okay, you can't really leave every single trade as a swing trade. So we thought how to add more confluences to our trading plan, and which zones should we take when considering leaving trades for like a larger amount of pips. And we basically have now 3 more confluences or recordings.
I'm sorry, go ahead.
Okay. So yeah, so I was saying we have 3 different zones which we have added as a confluence. The first one I would say is the zones that the vet introduced to the community, the zones that already hunted some liquidity and we're looking to trade from those. Those seem to be pretty powerful zones, especially when we go pro trend, when we have the direction on daily and 4-hourly, let's say bearish, and we finished with a retracement trade. As you can see in this image, but this is not very helpful, I'm going to zoom it in a bit. So here we were 4-hourly bearish and daily bearish, and this was just a retracement. So we were thinking, okay, apart from the areas that we have from Mr. DW,
not me, done.
How can we add more confluences to our plan? And I have some experience with the volume profiles. I was telling Ilya something, but just to make it clear for everyone, this is not a tool we're not basing our trades on this tool. We're just adding confluences. And I want to present you a little image over here because me and Zoe have been backtesting it and it's pretty valuable. So this is the big leg, and we use this volume profile tool just on the impulse. And this gives us some areas where the highest number of sellers kicked in. And we can see like the most traded area was this one, and the other highly traded area was this one. So this is called a high volume node. And it's basically where the price has started to push down. So we can expect the price to come and retest the volume cluster. It's like the OB from the extreme, pretty easy. Now, because in the middle here, we have a low volume node, which some of you may know as a fair value gap. We expect the price when it goes through this area to not to stop, just to fill it. And sometimes when we want to take, okay, the impulse went all the way down. Now it's going to retrace, but which is the OB that's going to give me a reaction? Because we had an OB here in the middle, and if we drop to the lower time frames above the 50%, we had multiple zones, like even here, and then will it come all the way to the top? So basically, we were expecting the price to come back to this area, and that's why we disregarded this area, which was below 50%. And we can see that price correctively came back into our area. Here we had a sweep of liquidity of the previous daily high. We had a 15-minute TC, which indicated that clearly, this was a 4-hourly OB. So we were in a 4-hourly OB with a M15 TC. That's all we need to indicate that we're continuing with the higher time frame bearishness. And the price started flushing down. Now, the most interesting part, this red line here, it's called the point of control. And it's an area that price mostly comes back to retest it. And we can see after it mitigated the extreme OB here inside this volume area, the price started impulsively going back down to touch the point of control and give a reaction. So we are thinking this volume like really gives us an indication that after touching this, the price will come back down here. Because if, for example, the point of control would be high up here, uh, we could say, okay, the price will come and retest, but we're not sure what it's going to do afterwards. This is another indication that the price is going to be bearish. And our latest trade from Friday, which Zoe is going to present because he has it marked, we also started using those flip zones that Ilya introduced in the last webinar, which hunt liquidity. And we also made a small case study with the trade we took on Friday, and which we left as a swing trade. But unfortunately, due to the spread overnight, we got kicked out, both me and Zoe. But we're going to talk about this in a minute. So we had a very strong demand zone here. I think this one, or everyone knows this one, because I think BlueFX also posted a case study, or he posted it on his Instagram. But basically, we had a strong demand area that first gave a reaction, then the demand got broken. Price went all the way back up, liquidated a bit, and formed a new supply that broke structure to the downside and actually broke M15 structure with the next candle. Then price consolidated here, made some liquidity above, which liquidated, came back into the newly formed supply area. And we took our first entry on from this newly formed supply area after the flip zone. We had a new structure break, and personally, I took another second entry there. Now, this was for us because this was a strong demand area. This was for us an indication that because price broke it, started consolidating below it, this could be a huge move downwards. So that's why we decided to go for a swing trade with this trade. And now Zoe is going to present the advantages of the maths he put behind all of this in order for like to still get a lot of partials from like a normal trade and to not leave money on the table.
Beautiful.
Perfect. Thanks, Razvan.
And if anyone has any questions, like for the VP or anything.
I can add something on this chart, I think. I hope some of you guys watched the video I published today. It was rendering, but this is a good example right there from... so this is a 15-minute demand, as Razvan said, and we got numerous reactions, and it fails. And so what is important, if you actually want to trade from the reaction of the demand area, you would like to see liquidity grabs. So what we see right here is that like the market reacts right there, then it liquidity grabs here. Then it reacts again, liquidity grabs here. Reacts again, then it actually comes for a liquidity grab right there, and then it flushes. So all of this is of course confluence that you can trade from this zone and not from something on the top, for example, right there. And I really wanted to zoom in. So let's say you actually did not take it from here, but you waited for another flip or TC. Yeah, if we can zoom in a little bit, we can see that we have a very little demand right here, right?
Wait, I'll go. Good.
Oh, you can find it even on TradingView.
Oh,
I'll pull it up. So
no, I think that picture was fine, bro.
yeah.
That was fine.
Okay.
Yeah, just a little detail right there. Yeah. Yes. So again, as I explained in today's video, we just keep following price. Right there, we had this break of structure. The demand that caused the break of structure was this bearish candle. And you can see that we actually pull back. We tapped inside a little bit. We responded, but then the next candle was an inside bar. So we did not take any liquidity, right? So this is a very minor example, but let's say you want to trade from the inside bar. Well, pretty much the inside bar is gonna become the liquidity. Why? Because it's the reaction, and the reaction did not get taken out, right? So maybe if this next candle opened, created a liquidity grab to the upside, and then dropped, then we can trade from it. And this is pretty much a simple example of why, on this case, we actually played from the extreme, right there. And you can see that inside bar got taken. So this is just a little bit of refinement there to what I touched on today. But now I'm excited to actually hear the maths, because this is what most of us are here for. Zoe.
Hi, so thank you guys. And Thank you, for having us. So I'm going to just present my screen and walk you through the maths and why I personally believe this is the best way of like trading. So hopefully you can see my screen now.
Yeah.
Which one can you see? I had the problem last time. You can see the spreadsheet, right?
Yeah, we can see Excel. Yeah, trading tracker.
Okay.
Yeah.
Yeah, this is my tracker. So what I've done is I've used a 20K account and then I've said we're going to do a risk of 1% per scenario. So what is a scenario? So each trading opportunity, like for example, the one we were seeing with Ruslan, rather than placing it as one trade, I would split that into 3 trades. So each trade would have a risk of 1/3%. So in this case, each trade would be 0.33%. So why am I doing that? And the reason why is in all cases, we would want partial on our trade. We wouldn't want to, say have the trade go in the direction. So we got it right and not be rewarded for it. We want to pay ourselves for getting something right and pay ourselves for the effort we put in to that trade. So this is why splitting it into 3 trades makes it a bit better for your psychology as well. So that is the parameters that I've used. And when I talk about a scenario, it's actually 3 trades in one. I'll come on to how you can actually manage that in reality, because it is very easy to do actually. So in terms of the maths, so what I've done is I've worked quite hard on this actually and put together what I feel is a good way of, 1, controlling your emotions, 2, making sure you're making good returns from the trade, and 3, not leaving too much profit on the table as well. So I put a note here to say that trailing stop loss allows you to focus on new opportunities in the market and avoid you getting overwhelmed while still being able to benefit from the overall move in the market. Sometimes when price flushes, you can't find an entry. So for example, on Friday, there was a massive flush to the downside. Today, there was a massive flush to the downside, and you just wouldn't be able to get an opportunity. So in order for you to capitalize from the move, when you see the high time frame pushing really hard, sometimes you may not get in. But if you do get in, it will reduce your level of FOMO because you're actually in the downward move or in the upward move when you start swing trading. And this will allow you to make a good return without being in the market over and over again and maybe getting stopped out as a result. In terms of the maths, so what I've done is I've built together different use cases. Each use case is whether you hit TP, whether you hit TP2, or whether you hit TP3. So we have TP1, 2, and 3. The best case scenario, and I've used 150 pips as TP3, and I'll explain why. This is GU specific. It may not apply to other currencies, so I am going to caveat it. I've tested this on GU, and GU moves, on average 80 pips to, 100 pips a day generally in a good trending market. So you're looking at maybe a 2 to 3 day turnaround time on that. In terms of the actual TPs, you'll have one TP at 3R, another TP at 5R, and the other one is a float. And this is your trailing stop loss TP. Why have I got 3 TPs? Is because, as I explained earlier, in each scenario, we have 3 trades, but it's all wrapped up in this 1%. And in terms of actually then saying, well, what am I benefiting from? So for example, I'm risking 1%. I could cash out and just walk away from my screen, having cashed out 5%. Like in this case, if I took no partials on a 5R trade, I would make 5%. Let's say you didn't do that and you said, okay, I'm going to do 50% at 3R and the remaining 50 at 5R, you would have made 4%. So that sounds pretty good. Why would you not do that? And why would you split your trades into your trade into 3? And the reason is, one, if you try to hold your trade and have no partials, you could get stopped out or you could hit break even. So yeah, it would be nice if it hit 5R, but sometimes that just doesn't happen and it comes back at you. So let's say you took 50% at 3R. 3R is a bit more realistic, 15 pip move. Generally, you get a reaction and you may hit 15 pips. Let's say you hit 15 pips and you hit, you also hit the 25 as well. That would make you 4R. The benefit of not doing the partials in this percentage and actually doing a third is explained here. So if, let's take the 50% scenario, if you had not taken 50% at those 2 TPs, you would have left profit of 800 minus 530. So this is the scenario where you hit TP1 and 2 and TP3 hasn't been hit yet. If I compare the profit that I made if I took 50% partials and then closed my trade at 5R versus if I took 3R and 5R but only took a third of the percentage of my trade and left a third as a float, I would have left $267 on the table, which is 1.33% between the 4% and the 2.67%. You may say, actually, I'm happy with that. And that's your personal choice. This is not, me saying this is the only way you should do it, but that's your personal choice. But what are you gaining from that? So you're leaving 1.33% on the table. And if you actually hit the profit of 150 pips on the swing, you would actually gain 8.6% over and above the 4%, just for leaving 1.33% on the table. So I hope that helps you to understand the power of swing trading, because here we've still, took some decent profit away. We've still taken 2.6% on our 1%, and we've left the ability to effectively make another $2,000 on that. So 10% effectively. So that is on the case of taking 50% partials. If we were to say, let's not take any partials, and we just said, I'm going to hold my trade 5R, and that's how I operate, I'm just going to work to a 5R, that's fine. But if we were to then say, if I didn't do that and I compared the profit that I could make if I was to do a third, I would be leaving $467 on the table. In percentage terms, that's 2.3%. And if you were to win the swing trade and hit the 150 pips, you would actually make 7.6% from your 2.3%. So that's a multiplier of 3.3x on what you left on the table. If you were to take the 50% analogy, you would be 6.5x on what you left on the table. So that is kind of the power behind swing trading. Firstly, you've got direction right. So you're not going to be emotionally looking at your charts. You can, take a break, go to the gym, do something else. Secondly, you're coming back to profits, which is always nice to see. And thirdly, if you do win, we're talking really, really good numbers here compared to, say, having to get another maybe 1 or 2 entries to achieve the same return. So another good thing about this is, personally, what I found is it makes me less stressed about trading, because even now I could go onto my chart and I could see that I'm in profit, and It just means, okay, I'm not going to take a forced trade. I'm just going to look at, higher quality trades. And it means that I'm not as, stressed about trading in general, and I can actually have a life. So one other thing that I would say is that in this strategy, like what I'm doing is I'm trailing my stop loss. So I trail it by 50 pips from the maximum price achieved. For some people who haven't used this functionality, if you use magic keys, it's great. Like you can just have your set TPs and it will just cash you out. So this is the best way of doing it, is like you can just set your TP and it will just cash you out where you want it to, and you can then have your float running with a trailing stop. So it's self-managed. So I know you may be sat there thinking, I don't want to, what if I missed 15 pips and it hits 14? My numbers are now messed up. But you can actually program it in so that it auto cashes you out. So again, reducing your stress whilst you're trading. And then lastly, when it comes to, let's say it doesn't actually hit the 150 pips, let's say you're on a trailing stop loss and it's 50 pips from the maximum price achieved from that push, or from that push to the upside or the downside. Let's say it moved up 100 pips from your entry and then retraced 50 pips, it would cash you out at 50 pips. So it's always how far has it gone? And then from that point, has it pulled back 50 pips? And if so, it'll cash you out. Of course, you may think, okay, well, I don't want to give 50 pips back. That's a lot of money. But actually, we're trying to get away from I want to take the cash off the table as quick as possible to gain something even further, which is, in this case, I'm going to leave 1.3% in the market for a potential gain of 8.6, or in this case, 2.3 versus 7.6. So in order for you to actually be in the game, you have to leave a bit on the table. So I guess then the question is, well, what if I wanted to take 3 trades? So to do this scenario, but I wanted to get the same amount of profit as $800, but I've got 3 trades now running. What is my break even? So in this case, the break even would be 6.7 times the movement. So in this case, I'm using a 5 pip stop loss. So if I do this times this, in theory, it should work. Have I done that right? So that's not quite worked, but let's just do it manually. So that is okay, 4. Yeah. So in this case, in order to get $800, which is if I was to partial at 3R and then close my trade at 5R, in order for this to work out and match the same profit, I would have had to have a TP of 4 in this case, which is 20 pips because it's 5 SL. So here, if I have price hit 70 pips, because if you remember, we had a trailing stop loss of 50, it would have hit 70 pips and then retrace back to 20 pips from your entry. If it does do that, you would have got the same amount of money had you had closed out at 5R. But yeah, okay, you might say, what was the point? The point was the potential gain is the point here. On the same basis, if I was to want to achieve 1,000, if I was to want to achieve that, I think it should be 7. Okay, 7R. So you'd have to hit 35 pips in order for you to achieve the same amount of profit had you had closed out at 5R, which is 25 pips. Here, again, if you were to use that, you're looking at 3.3x on what you left on the table. So that is the principle behind what we're doing here. And it means that you can manage your trades better and let them run for longer. So the whole idea of why I did this was my strike rate is awful. I'm not going to lie. And as a result, like I wanted to make my wins work harder for me to make up for the losses. And when your strike rate gets better and better, you know, it's just even more profit thereafter. But for me, the whole point in this was I need to become profitable, because before I've joined here, I wasn't a profitable trader. So I needed to build something that mathematically made sense. And that's why I came up with this. So how is that in action on the charts? So following on from Razwan, I took the same trade. We both took the same trade. We had a really nice kind of, if I just zoom in, we had a nice TC, and we had then a retracement into the extreme, which we looked at in the case study earlier. So then getting into the entry at the same zone where we had the flip, and then seeing price push to the downside. So if I just play out price, we had, unfortunately, due to spread, we did get closed out. But what we saw was a really nice push to the downside. So by this point on Friday, we were like, you know, we'd already pushed 114 pips from our entry. So very quickly, I knew that my, you know, profit at a minimum based on that would be 63 pips from my entry. So looking at the scenarios, I've not just made the profit that I would have made for 50% partials, but also if I'd have cashed out at 5R, I've made more than that, because I've got, what was it? Let's just say 65. So I've already made, oh, it's not worked. It's because it's driven by that, isn't it? So what's that? So I've already made more than 1,000. I've made 1,400 on the same scenario, on the same trade. I've been able to squeeze out another $400 out of this. So I've made another 2% for doing nothing other than leaving a bit of profit on the table. So it actually did cash out at this point, hence why, you know, I'm saying this is what actually was achieved on this trade. It wasn't something that is, you know, hypothetical. We both got stopped out here. I know price never hit that. I looked at MT4, it never actually got to that price, but obviously due to spread, it's taken us out there, unfortunately. But in kind of a hypothetical world, let's say it was not, you know, it didn't retrace as far back as 50 pips and it pulled back to here from there, you can quickly see that then you would move this 50 pip retracement down to here, and you can then say, actually, this wasn't my TP. My TP was actually here as my minimum profit being achieved, assuming I don't cash out 150 pips. Obviously, if it goes and just runs to the downside and hits my 150, then great. You know, like I have had that before where it has, you know, on a paper trade ran to 150 pips. So that would be ideal case scenario, but in this case, it did cashes out here. So that is how it works. So what is the benefit of having TP1 and 2? TP1 is at 3R. So once I hit 3R, my trade goes to break even and I turn everything off and just carry on with my day. That is how I trade now. So if TP1 hits, I've got 3R. It would move to break even. And then if TP2 hits, you know, everything else is just bonus after that. In terms of like your coverage, so if I go back to the maths for a little bit, you're risking 1% on your trade. So that's $200. If you hit TP1 and hit a break even, you make 1%. So every time you take a trade and you hit TP1, it will cover you for the next trade. So it's a 1-to-1 ratio. So whereas before, if you just cashed out at 3R on 1%, you would make 3%. Here you're making 1%. So again, the reason why we're doing that is for the benefit of making more money from, price running away. And it does do that, as we saw even today. So that is the benefit. Of course, again, you don't have to do this, but both, me and Rezwan, we've done some testing around this, and we do see it's really favorable. And it just means that once you're in a good trade, you can just sit back and relax. And it's not about if you're going to make a profit, it's about how much profit you're going to make. So that is kind of it, really. Again, if we do see any kind of retracement, yeah, you can follow it. Personally, I've got to a point where I just, if I have a push, I just move this box down. So I move it to here, and I can then just see very clearly like where it's going to cash out if it does. Otherwise, if I have another session, another structure break, I'll just move it further. But I wouldn't actually have this on the chart because I would want to look for other entries as well. So again, this then becomes quite powerful because you can just hide this and then just continue trading on other opportunities. And if it cashes out, great. If it comes back and closes you out, still it's pretty good. So hopefully that made sense. And into this thing here, which is coverage, just to help you guys understand, is how many times can I take this trade at 1% before I've broken even. So because I made 2.6%, I can take 2.6 trades before I've ran out of the profit that I made. Assuming that I lost 2.6 trades, I would have zero cash left. If I took a TP1 in one trade and then I lost my next trade, that would be all the profit lost for that scenario. And if I was to win the trade or anything in between that, the coverage would tell you how many times can I take a trade before I lost all the profit I made on that scenario. So in this case, you've got 12.6 trades, or where you can potentially gain some. I'm hoping that you'd win a few between 12.6 and this trade, and hopefully as a result, your curve of equity would look like this, because your pushes would be bigger to the upside, and that's kind of the goal. So hopefully that made sense. I'm open to questions if there are any.
Yes, I got numerous questions during the presentation, but I just hit it to interrupt you. So.
Oh, all right.
And now I forgot most of them. So first I would like to start with just simplifying a little bit and going back to the basics, just to make it clear for everyone. So we take a 1% position, but we spread it in 3. And so each TP is taking 0.33% out, right? Cashing out.
Yeah, that's right.
Yeah. So you can do this with magic keys. So it has an option that says close custom. So you can set this one to like 0.33, or you can of course have like a partial TP set. You can have numerous partial TP set for exactly 0.33. So it hits. So the first one is a 3R, the second one is a 5R. And then you pretty much, for the final TP, you leave only 0.33% to run, right?
Yeah, exactly. So it's a third.
Yeah, then I would like to ask you about this. Where was it? Yeah, this one right there. So, so this is the profit that, so if you decide to actually take everything at 5R, you're actually going to take this profit, but instead of taking it, you're leaving it on the table.
Yeah, exactly.
Okay.
So what this signifies, this signifies if I was to compare my 50% partial to leaving a third on the table and trying to go for the big swing.
Yeah. Okay.
And then this comparison, because some people don't actually partial 50-50, They may just, take their whole position and say, we only have one TP at 5R. I've done a comparison to say, well, if you leave 2.3% on the table, again, what are you benefiting having left that on the table? You could take a lot more profit. You could not cash out $1,000. You could make another 1,500 on that, which in percentage terms is about 7%.
Exactly. Good.
To be precise, it's 7.6.
So, okay. Can you maybe, about the trailing of the stop loss. So have you thought about making it more structure wise, or do you really love to set it with a trailing stop, like 50 pips, as you said?
I thought about this and I've come to the conclusion that if you want to do structure, use TP2 as your structure, assuming it's more than 5R. So for example, let's say I was trailing my stop loss, but actually, why did you take 50? Why did you use that? Why didn't you use this as your reference point?
Yeah. And
say, actually, I want price to stay below this line. And had you had done that, maybe you would have still been in the trade. Yeah, of course. Me and Razwan, we talked about this and we were like, actually, should we do that? Because it makes sense and we're using what we see. I came to the conclusion that sometimes, for example, here it might work and sometimes it might stop you out. So I'm trying to reduce the amount of work in a trade. And, you have to be happy with what you get. And in this case, 64 pips on the move was great. And it's about reducing the amount of management that you need to do because you want to look for the next best setup. So let that just do its thing in the background. And, so for example, I took this trade on Friday and then, I took the sell today as well, which is currently running. So I cashed out the TP1 and 2 on this and just let it run. And then today I looked for a new setup and I didn't have to manage this anymore. It kind of did its own thing. And I looked for the next setup and managed to take, I think it was this sell here to the downside. So just look for your next setup rather than trying to milk the other one.
I think we also talked about the fact that if you make the TP on the structure, you can have like a small false break around the structure where you left your TP, but that wouldn't be a 50 pip retracement. So then the price would still flush down, but you wouldn't still have the TP3 for the trade, even though afterwards it would hit. And mostly, I think we talked about this during NFP, because if you have it during NFP, price can just fake up an area or mitigate a zone that was unmitigated without really moving 50 pips. So
this was NFP.
Yeah. So let's say we had it just above, it would fake it, take the stop loss there, and then continue flushing. But it didn't really retrace 50 pips.
Yeah, and we spoke about this, me and Rizal. We were like, what should we do? And I just said, as long as you're at break even, just let it run, because news is a manipulation tool. So I'm expecting it to just carry on going. And it did. It did exactly that. We had a massive wick to the upside. We were obviously up here in our entry. So, it took people out to create more liquidity to push to the downside.
Yeah.
So that's what it did. So so I think if you do want to trade structure and it's and you want to say I want to have a reference point where a TP, I would say TP2 would be your reference, because TP1 is a psychological thing. That is basically saying, I put a lot of work in. I want to be rewarded for this. I've taken some profit. Great. It takes away that kind of FOMO feeling, and it also helps to feel good about the fact that you're trading, if I'm honest. So that's why TP1 is there. And that's what I've been doing for a very long time, is always having 3R as a TP, because then I feel like, okay, cool, that was worth it. TP2, I say, yeah, okay, you can play around with that. If you want to say, look, I want to use that as a structure reference, cool, but just make sure it's not less than 5R then, so the numbers still work. Once I get better, I may look at doing that. I'm still quite new to this, so maybe once I've got more confidence, I can probably look at, tailoring that to 5R or more. And then TP3 would still be your runner, which would have the trail. And then that way you can just walk away from it and look for the next opportunity. So for example, even like say, for example, you had a buy, you took a buy here, like maybe your question could be like, well, why would I take a buy and still have 150 pip TP? Like, I'm sell side. Yeah. The whole thing is selling off. But what's to say, like, we're in the discount, we're in zero, discount, and it's now going to retrace into the 50% or even higher on the 4 hour. So yeah, it could actually push that 150 pips, because really it's never going to keep flushing. It's going to have to pull back at some point. So the whole point of the 150 pips and not using structure on that TP is because it may just smash through your demand. And yeah, it's going to carry on going, which it has done in the past. So why force your opinion on it? It has to respect that demand, let market do its thing. And if it's running away and smashing through all those demands and carrying on, at least you're going with the big boys.
Exactly. No, yeah, just to be sure you actually got my question right. I was asking about the trailing, not TP, but the trailing stop loss that you have. So instead of trailing it automatically with 50 pips, for example, a GU can make an average of 50 pips, but let's say like there is a supply level on top. So why don't you just place the stop loss above the supply level so that you're safe? Something like
you could like, and sometimes it doesn't work and sometimes it does work.
Yeah.
And that's probably sorry, it's not the most conclusive of answers, but like in this case it does work. And in some cases, like it was a bit lower and this was like a 35 pips and it would have stopped you out. But had you had left it at 50, you had a bit more breathing room, and you could have just done that. So it could have just carried on going. And sometimes I've seen this where it's like 35 pips and then it goes and hits your 150.
Yeah.
But like, say if it was at the structure point, like let's say this was the structure point here, and you said, actually, I'm going to leave my TP at that point. Price can sometimes just come back to it and then react from it, because it needs that to keep pushing.
Yeah, but I would leave it there on top, the stop loss.
Okay.
If this is my last buy to sell, and then I think, okay, cool, this is my range, 50%, this is liquidity, this can come to mitigate this one. So if I get taken above this one, then I want to be out, because this is like the point of failure.
Yeah, okay. I've not thought of that. I think when me and when we had a look at this, we said at this point, we didn't really consider this point.
Yeah, you should consider the top, because if you place it at the bottom, this is where it's going to mitigate actually. So it's pretty wrong to place it there at the mitigation point.
Yeah, no, that's fair. That's fair point.
Something we can...
maybe something to look into.
To give us an input on his view. I said this why we needed the boss to give us an input with the view.
Another question before I begin. So can you go to the tracker? It was one of the scenarios with the TP1, TP1 and BE. So 3R, as you said, 3R can just be your reaction. Do you think a lot of times it can tap 3R, take your first TP, and then go to break even? And again, just considering structure, sometimes it reacts, gives you the reaction, but then it just comes to mitigate your entry. This also happens a lot. So what are your thoughts on this?
Sure. So I have seen a lot of the time, GU especially, you pretty much most of the time you'll get 15 pips. Quite a lot of the time, if you've got a good entry, like and you've got it right, you'll get 15 pips. I know one of the videos, I think or was it one of the webinars that we were on?
Yeah, the vet
And
share the 20 pip ranges. Yeah.
Exactly.
Yeah.
Exactly. So I've gone for 15 on the basis that I don't take an SL larger than 5. So sometimes I might have an SL smaller than this. So I've had, like when I've been trading euro or when I've been trading like on GU, you may have a smaller supply or demand, and you might have like 3.5 pips. So the beauty of this is actually, okay, you now only need 10 pips to hit your 3R, which is the first point to say, is it going to reach that? Yeah, it most likely should do, but if your SL is smaller, it's even more probable because it's even smaller distance.
Exactly.
And then the second thing is your 150 now doesn't actually return you based on 5 SL because it's a fixed amount. It's not based on like a risk to reward. So now your 150 is actually worth even more. And, now it's worth 16.95%.
Yeah.
So it's worth 17% versus your 5% there. So here you have 5R, it's 17.5 pips. It makes you the 5%. Here, you may have to travel a bit more, but the traveling is the same distance. You just got a higher SL, but now you've made a lot more money because your lot size was a lot larger. Yeah. So now you made 16.95%. So that's another reason why I like this, because now it's not about can I hit my 3R or 5R? It's about, well, let the market do what it does. If I have a tight stop loss, I'll make even more.
Okay. Stop this. Okay. Wow, my mind is full right now. I'm also thinking of it because me personally, I don't like running trades like this. I just like to be in, good, push 5R, 6R, just take it.
I agree.
For traders like me that don't want to swing, then we also have to do the maths for this, for example, with a maximum, let's say 5 to 6R. Because for EU, this is like what it provides most of the time. It's always going to tap 3R. So I do think...
So this one's done.
Yeah. But then the later thing is how to manage the remaining, for example, 0.66% that are on the table in order to ensure a bigger reward. So
sure. So I guess like at this point you've hit TP1, so you're at break even anyway. So either you hit break even, you hit your TP2, and you make you cash out another third, and you make this much. And it's because you've got like the tools in Magic Keys. It's not like you need to manage it at all. I think it's just a psychological thing of I've got a trade running. I think that's kind of probably the hardest thing to get over. But once you realize that that trade is always going to be profitable, it's not about that's going to be in a loss. You'll get over that psychology of I'm in a trade. I need and start sweating about it. Like why would you? Because you're in a profit. It's about how much profit you're going to make. It's not about is it going to hit my stop loss.
Exactly.
So I don't know if that helps.
Yeah. Well, for those of you that are watching and those of you that are rewatching, extract whatever you can from this session. And again, this is also going to depend. It's very important to note it's going to depend on the market conditions. We had January and February, and we did not have we did have them, but you can have like multiple like of this scenario right there. So this is what worries me. Like you can take a lot of trades and you might bank it at 3R, but then let's say like you have you take the trade from here, there is your 3R, you taking it, boom, break even, right? So then you have to take another trade, and you do this over and over and over. But the good thing about this one is we saw that it actually covers you for one more trade, so you pretty much get one trade for free, right? So exactly. As long as you don't lose later, you should be fine. But then if the market is in such a range, it's chopping around, it's not actually moving in a trending manner, you're gonna have a hard time. So at this point, then you have to adapt and maybe throw away the floating TP, and then, for example, adjust to more like either 50% partials right there, or just TP2 and just bank it.
Yeah,
But
this is like we were also talking, Ilya, about like we want to take like the ones that are pro trend or something, because if we're in a market like January, there's no way you can reach 150, 200 pips
Yeah.
per trade.
Okay. Well, that's very good. I'm gonna brainstorm with it as well. We have to also kind of adapt this to the pair, because on EU, 150 pips is it's a little bit hard
Quite bullish.
sometimes.
Yeah.
AU does move a lot. We have to make Matty backtest this one. I'm gonna do EU. You can guys go ahead with GU. But yeah, the thing is, as you said, Zoe, in the beginning, is how can we extract as much money as possible for less stress as possible. So that is very good. That's very good. And you also we need to have a plan regarding taking partials in profit, because oftentimes you take a trade, it goes good. Oh man, I'm gonna swing this over the fence, 150R, and then it hits your break even. So if you have those TPs set in place, you make sure that you extract money, you secure the trade, psychology is good. So you just, as you said, Zoe, focus on the next trade. So very good.
I guess to kind of build on that, like I know like some of my friends who aren't on in this forum, but like in a different course that I did, you know, like they would swing a trade and they would be up like say 5%, and then I would speak to them the next day and be like, it hit break even.
Yeah.
And it's like, why don't you take any profit off the table? And they just said, I thought we're just going to keep pushing. And then they have this like conversation with their screen, like, okay, if you give me like, you know, maybe not the 100 pips, but I'll take 75. And then it goes back to 30. And then like, okay, I'll take the 50, man. Like, come on, just give me the 50. And then it hits their break even and they're like, oh, fuck, like,
and
you know.
Throw the screen out of the window.
Yeah. And then they need a new keyboard. So, and that's the benefit of having your trailer. So it's not psychological. You're not battling with your own mentality of, shall I take it off? It's robotic. So it doesn't worry about emotions.
Okay, good.
Cool.
Guys, how did you find it, the others? I'm the only one asking questions. Come on.
I have a question. Do you have a configuration file for Magic Keys, a set file?
That is a good question. So I actually don't use Magic Keys.
Okay.
I use a different tool that it's basically the same, but I use a different tool. So I'm more than happy to like share the tool that I have, and if that's any good.
But I think MetaTrader has a trailer inside it.
It does. So really, like, I do think you should have something that auto cashes you out at TP1 and TP2.
Yeah.
Don't sit there and try and do that manually. You'll never get it right. So Magic Keys, I think, has this, right?
Yeah.
So I think just do that, and then if you right click on your trade and put a trailing stop loss of 50, it will have already, like, let's say your stop loss is 5 pips. TP2 is, 25. So in order for you to like have your trailing stop loss activate, it needs to have moved 50 pips already. So once it hits 51 pips, your SL is 1 pip, and so on. So, and if it doesn't, and it hits 35 pips and moves back, it's break even. Cool. So that's kind of maybe a way of doing it.
Thank you.
Okay. Anything else, guys? I think you have to rewatch the session again, then maybe brainstorm, all of you that are here, and let us all know what you think. How would you like to implement this in your trading? The ones that like to swing for the fences, we have who loved to swing. I think it was Milhan or Suhil, who made like a very big move on EU last week. So for those traders, then you have to trail for the majority of us that take like a tighter stop and are happy with like 5R, 6R max, then we also have to think of way to implement this. And yeah, but personally, my favorite thing is taking 30% of 3R, which pretty much secures your risk, which is great.
Yeah, so this gives you a free trade.
This gives you a free
Basically.
trade. Yeah.
Yeah.
Okay.
If you have any questions, feel free to hit me up, like more than happy to answer any questions as well. I'm called Old School Junglist, don't ask.
Junglist. Yeah, first time Rozvan was like, hey bro, I want to get connected to Zoe, but I can't find him. What is it?
Yeah.
What's his
if
name?
anyone knows, yeah.
That's how the story started.
Yeah. That's how you guys started dating, yeah?
It was, yeah.
Oh, man.
That's actually my Steam name, so that's how that came about. Yeah, like I don't know if anyone's into drum and bass, but if they are, they'll probably understand my name. But yeah. Anyways.
Okay. Cool. A lot to think about, Ryan. It's great to see you here, Ryan. I'm gonna reply to your message in a bit. Yes, guys. Well, rewatch it. I'm gonna post it somewhere. I don't know where. I'm gonna post it somewhere. I'm gonna share the link, rewatch it, and then message us all or just in the general chat, wherever, what you think. Let's keep refining. And yes, thank you so much, Zoe and Rozvan, for putting this together, guys. It's really nice to see the initiative. So let's go.
Thank you for having us.
Oh, my pleasure.
Hopefully we can, squeeze some more profit out of this guy.
Cool. Okay, guys. Well, I wish you an amazing evening to all of you, and chat with you tomorrow.
Have a great evening, guys.
Take care. Take care. Bye.
Bye.
See you. Bye.
Bye.